Hello everyone, this is Dr. Mihir Shah once again with another video. This is our third part of last minute revision for the topics to be covered to easily pass your project management subject for semester 6 TYBMS. Let us see which are the topics that you need to cover now.
Okay, now this is the very first sum under valuation as per net asset method. Okay, in this sum we are going to find the value of share as per net asset method. So now let us go through the question once. In the question is given that Tiger Limited wishes to take over Leopard Limited. The financial details of the two companies are as under. They are giving you Tiger Limited and Leopard Limited, and they are giving you equity share, security premium, profit and loss account, preference share, debentures, fixed asset and current assets. After that, they're giving you calculate the net asset value per share and find out the exchange ratio. Now we have already discussed the format, okay, how you need to solve in order to find the value of share as per net asset method, and what are the formulas to find the exchange ratio. So now let us inculcate the same in this particular sum. Okay, so first thing first, we'll note down whatever details have been given. So we'll make the format may we'll have particulars, okay. Two companies are there, one is Tiger Limited and the other one is Leopard. So I'll write here this one is Tiger, one is Leopard. Okay, now as per the format, it's always assets at market value less liabilities, that is outside liabilities, less preference shares, and thereafter whatever is available, that is nothing but the net asset available to the equity shareholder. So number one, what we note down here, we'll write assets at market value. Okay, asset at market value. Okay, we will underline this line asset as market value, and we'll note down what all assets have been given to us in the question. Now if you look carefully in the question, they have given us fixed asset and net current asset. Okay, so I'll write here fixed asset. The values of fixed assets are 1,22,000 and for Leopard it is 35,000. So we'll note down this as 35,000. The next thing was net current assets. So I'll write this here as current asset. The values are 51,000 and 26,000. Okay, the moment we add up, we will get our total assets. So we will add it up. So 122 plus 51,000 is 1,73,000. 35 plus 26 is 61,000. Now very simple. The next step is, once we note down this, the next step is we need to subtract all your outside liabilities and all the preference share if there are any. Now if you look carefully, I can see in the liability side, we can see that there is 10% debentures, and then there is also preference shares. So we have liabilities, outside liability along with preference shares. So now what I'll write here is, I'll write the next thing as less. We have outside liability. So under outside liability, we'll directly write here 10% debentures are there. The value is 15,000 and 5,000. So we'll note down that as 15,000 and 5,000. And after that, even we have less preference shares. Question mein they also have given us preference shares. So less preference shares. The value is 20,000 for the first company, that is Tiger, and nil for Leopard. Okay, again very simple. You note down all the asset, you less all the outside liability, you less the preference share, and whatever value you will get now is nothing but the net asset available to the equity shareholder. Okay, so 1,73,000 minus 15 minus 20. Okay, the value that you all should have got would have been 1,38,000 for Tiger, and 61,000 minus 5,000 would be 56,000. This is nothing but net assets available to equity shareholders. Okay, so this is net asset available. Once we get the net asset available, okay, now we need to find the net asset value per share. Okay, so very simple now. That's the first thing that we need to find. Net asset value per share. The formula is net asset available divided by number of equity shares. Okay, net asset available in the sense net asset available to the equity shareholder upon number of equity shares. Now in the first case, the net asset available is 1,38,000 divided by. Now we need to find the number of equity shares. Now for Tiger Limited, it's given that equity share capital rupees 10 per share and the amount is 1 lakh. So rupees 1 lakh divided by 10, we'll get the number of shares. So we have 10,000 shares in the first case. So 1,38,000 divided by 10,000, we get the value of share as rupees 13.80. Okay, that's rupees 13.80 per share, the net asset value of the share. Similarly, for the Leopard Limited, it will be 56,000 divided by the number of shares. Now the value is given here as 50,000 of 10 rupees each. So 50,000 divided by 10 is 5,000 shares. So we note down this as 5,000. You divide, your total value should be rupees 11.20. So that's the first answer, that is net asset value per share as per net asset value method. Okay, this is what you need to solve. You need to take all the asset, less all the liability, less all preference share. Whatever value you get is your asset, net asset available to the equity shareholder, divided by the number of shares. You get the value of share as per net asset method. That's the first part of the sum. Now the second part, they ask us to find the exchange ratio. So now second, before finding the exchange ratio, okay, so what we are going to do here now is the formula. We already have this learned about the formula, so I'll write here as exchange ratio on net asset value method is equal to net asset of the company who is going to get taken over. Now in the question is given that Tiger is going to take over Leopard. So here it will be the net asset, whichever company is getting taken over, net asset of taken over company, so it will be Leopard, upon net asset of the company who is taking over the other company. So in this case Tiger is taking over, so upon Tiger. So in our case, the formula, the value would have been net asset of Leopard is 11.20 divided by 13.80. So we get the ratio, the exchange ratio as 0.811 share approximately. So this is the meaning of, for every 1 share of Tiger, Leopard will be getting 0.811 share. So now let us see the final answer, Therefore the number of shares issued. Number of shares issued will be number of shares of the taken over company, that is Leopard, into the exchange ratio. So here we have number of equity shares of Leopard was 5,000 into the ratio 0.811 share. When you multiply, we got the value as 4055 shares. So in order to Tiger to take over Leopard, Tiger will have to give Leopard 4055 shares of Tiger Limited. Okay, again, a very simple sum. You just have to follow those orders. Okay, just follow the step which I have told you all, and you all can solve any sum based on net asset value method. So this was the very first sum based on net asset value method. Now we will be solving another sum to register this format very firmly in your mind. Okay. So now let us see the very second sum, how to calculate net asset. Also along with that we will be searching and finding the exchange ratio. So this was sum number 1. Now we're going to start with sum number 2. Okay, now this is the second question. Okay, let us first read one time the question and then we'll see how we need to go about in solving this sum. It is given that Street Limited proposes to take over Road Limited. The goodwill may be taken as 96,000 for Street and 38,000 for Road. Stock of both the companies have been given as 2,04,000 and 1,42,000 respectively. They are giving you liabilities and they are giving you many assets. Okay. Calculate net asset value per share. So they're asking us to find the value of shares per net asset method and also find out the exchange ratio. Again, exactly in the same way we will be solving. We have two, so I'll note down your particulars. We have two company. One is Street Limited, so I'll write it here as Street Limited. And we have Road Limited. So I'll note down this as Road Limited. A format will be very simple. We will start off with the asset side. Okay, so we'll note down here, the asset as per first heading will be assets as per or at market value. So here we are going to note down all the assets. Now if you look carefully on the asset side of the question, they are giving you fixed assets, investments, stock, debtors and cash. So we will be noting down in the same order. Just remember, on top of the table there's an adjustment stating that there is some goodwill and then the value of stock is also given to us. So we'll have to take the revised stock ka value. Okay. So now, excuse me. First we'll start with fixed asset. So I'll note down that. Number 1 is fixed assets. The values are 4 lakh and 1 lakh. Next is investment. The value is 1 lakh. Next we have stock. Now the stock given in the question is 2 lakh and 1,30,000, but we have to take the one which is given in the adjustment. So they told us to take the stock at 2,04,000 and 1,42,000. So I'm taking it there. After stock we have debtors. So debtors are 1,70,000 and 60,000. After debtors we have cash, so we will take that also, 30,000 and 10,000. With this all our assets and one more thing. I just made this line, but we have one more thing. Goodwill is also an asset. So goodwill given in the question is 96,000 and 38,000. Okay, 96,000 and 38,000. Now, once we have got all the assets done, okay, now we can easily add it up. So let us add all the assets. So when we add up all the assets, okay, look at this very carefully. Adding all the assets, we should have got the value as, for the first one, okay, all this is 9,04,000 plus 96,000. So that comes to 10 lakhs. So I have 2, 3, 4, 5, 6. I have 10 lakh Street Limited. Same way on the other side, it was supposed to be 3,12,000. This is 3,12,000 plus the goodwill of 38,000. So that comes to 3,50,000. Okay. Now this is all the asset side. Now we need to check the liability side. Now under liability, if you can look carefully, there's only one thing here, that is creditors. So I'll write here less creditors, that is external liability. The values are 1,50,000, 1,50,000. So other than that, there is no preference share or nothing. So when I subtract it, 10 lakh minus 1 lakh will be 9 lakhs. And 3,50,000 minus 50 is 3 lakhs. This is nothing but net assets available to equity shareholders. Okay, so that's like our answer. Those are the net assets. Now very simple, we just have to apply into the formula. So our very first formula is we need to find the value of share. So net asset value per share is equal to net assets available to the equity shareholder upon number of equity share. Now the net asset available for the first is 9 lakhs upon, now to find the number of equity share, look at this very carefully, okay. In total, if you can see, equity share value is given as 5 lakhs. So 5 lakh of 10 each. So 5 lakh divided by 10. The number of equity share we should get is 50,000. 9 lakh divided by 50,000, we will get rupees 18 per share. That's the first net asset value of the share. For the second, the assets available is 3 lakhs divided by the number of equity shares. So there are 2 lakh equity share of 10 each. So it will be 20,000. So the value should come to rupees 15 per share. That's the first answer, value of share as per net asset method. Second, they are asking you to find the exchange ratio. So we'll note down this as the exchange ratio on net asset value is the company, the net asset of the company that is getting taken over, the net asset of road upon net asset of street. So that is 15 divided by 18. Okay, the ratio that we get is 0.8333 approximately. So therefore, the number of shares issued will be the number of shares of road limited that is going to be taken over into the exchange ratio. So number of equity share was 20,000 shares. So 20,000 into 0.8333. When you multiply, you get the answer as 16,667 shares. So if Street Limited wants to take over Road Limited, it will have to give Road Limited 16,667 shares of Street Limited. This is how you all had to solve the sum based on net asset value method along with the exchange ratio. Okay, now let us see the second sum. Okay, now let us read the question. Now this is a different variation in the sum. From the following balance sheet of Ninad Limited, they are giving you liabilities. Under liabilities, they are given as preference shares. There are debentures and assets have been given to us. After that, they are giving you details of sale, expenses and interest for the last 5 years ended are given to us. We have sales and expenses, interest on loan, interest on debenture. Remember, interest on loan, interest on debenture and expenses, they all are expenses. Rate of income tax is given as 40%, NRR is 12%, fixed assets ka values have been given to us. And thereafter they told you find out the value of equity share as per earning capacity method or yield method. Now again, very simple. In order to solve sum based on yield method, you need to have, the step is you need to find first the available profit to the equity shareholder. For that we need average profit, or we need the profits. Now in the sum, they haven't given us any profit, but they have given you sales and all the expenses. We know that from sales, if you deduct all your expenses, whatever remains is nothing but your net profit. Once I get my net profit, we will find the average profit. From average profit, we will remove the tax. We will remove the preference dividend and any transfer if there are any. In the sum, there are no transfers, so we'll remove the preference dividend. Whatever amount is available is nothing but amount available to the equity shareholders. Okay. So based on that, let us see how we solve the sum. Now, they have given us, so I'll note down your particulars. They have given you data for 5 years. So we have 2011 ka data, 2012, 2013, 2014 and 2015. The very first thing that they have given you is sales. The value of sales are the value of sales are 4,50,000 for the first year, 5,50,000 for the second year, 7 lakhs for the third year, 4 lakhs for the fourth year, and 8 lakhs for the last year. From that, we have to less all our expenses. Now they are giving you expenses as 1,75,000. Okay, even we need to less interest on loan and less interest on debentures. So interest on loan for the first one is 10,000. Interest on debenture is 15,000. For the second year, it is expense of 2,90,000, 20,000 and 15,000. For the third one, it is 3 lakhs. 25,000 and 15,000. For the next, it is 1,55,000, 30,000 and 15,000. Last one ke liye it is 4 lakhs, 10,000 and 15,000. So from sales, when you subtract all your expenses, okay, whatever we'll get is nothing but our net profit or our profit before tax. So I'll write here profit before tax. So I'll write this as PBT. Okay, profit before tax. So the profit before tax should be, for the first case, it is 2,50,000. Next is 2,25,000. For the third one is 3,60,000. Fourth one is 2 lakhs and 3,75,000. Okay, once you have got your profit before tax, now very simple. Now we need to find, now we go as per our format. As per our format, we need to find average profit. Okay, now average profit before tax is nothing but the addition of all the profit before tax. So 250, 225, 3,60,000, 2 lakh, 3,75,000. When you add up, you will get the value as 14,10,000 divided by the number of years. So 5 years. When you divided, our average profit should have been 2,82,000. From our average profit, we have less tax. In this case, the tax is 40%. So less 40%. The 40% of 2,82,000 will be 1,12,800. You will subtract this and we will get profit after tax. So profit after tax will be 1,69,200. Now from this value you need to deduct, okay, from this value we need to deduct any transfer or any preference dividend. Now there is no transfer given in the question, but then there is preference dividend. So I'll write here preference dividend. The value of preference share in the question is 1 lakh and the rate of dividend which is given is 8%. So 1 lakh into 8% is 8,000. We subtract this and I get 1,61,200 as my profit available to the equity shareholder. So this is nothing but profit available to equity shareholder. Now once I get my profit available to the equity shareholder, I can go ahead and find my expected rate of return. ERR is profit available upon equity share capital into 100. So the profit available is 1,61,200. Equity share given in the question, if you look carefully, is 5 lakhs into 100. So our expected rate of return is 32.24%. Last value of share as per yield method equals to ERR upon NRR into paid up value. ERR is 32.24. NRR, in the question, NRR is given as, if you look carefully, it's given as 12.5%. Into the paid up value, equity share ka paid up value is 10. So when you multiply, divide, you get a final answer as rupees 25.79 rupees. That's the value of share as per share as per yield method, also known as earning capacity method. Okay, so with that, video based on finding value of share as per yield method comes to an end. With this, we were able to solve two different sums under the same method. I hope everyone have understood this. With that, we will be ending this video here. Thank you. The next question, we just read it once. The following is the balance sheet given to us. They're giving you liability rupees, asset rupees. Okay, all the liabilities, all the assets, and they told you the company transfer 20% of its profit to GR. Net profit of the last 3 years are given. Machinery is valued at this amount. Average yield in the type of business is 20%. Rate of tax is 50%. Calculate the value of one equity share. That is, calculate the value of share on the basis of number 1. Okay, they are giving you 2 parts in this. Okay, so number 1, they told you to solve as per intrinsic value method, that is nothing but net asset value method, and second, yield method. Okay, so we'll have to solve this sum using 2 different methods. So very important topic. Okay, this is, so let us see how to solve that under both the methods. So first I will give net asset method, also known as intrinsic value method. So first method is net asset method, also known as intrinsic value method. The format is very simple. It's all the assets minus the liabilities. So in the asset, very first thing which is given is machinery. The machinery given in the question is 4,80,000, but then there's an adjustment. Under adjustment, they told you take the machinery as 6,37,200. Rest nothing, so we just noted down as it is. Furniture is 2 lakhs. We have stock 12,40,000. Debtors 4,12,000. Cash in hand 6,800, and cash at bank 8,68,000. Okay, the total comes to 33,64,000. From this you have to minus your liability, so less outside liabilities. So outside liabilities may we have creditors, which is 8,18,000, and provision for tax, which is 3,96,000. Okay, so asset ka total minus liability, so that is 33,64,000 minus 81,800. Sorry, 33,64,000 minus 8,18,000 minus 3 lakh 96,000. We will get the value as 21,50,000. This is nothing but amount available to equity shareholders. Now we need to find value of share as per intrinsic value method. The formula is amount available upon number of equity share. Amount available was 21,50,000. Number of equity share. Now in the question they are given you 50,000 equity share of 20 each. So the number of shares is 50,000. So 21,50,000 divided by 50,000, we get the rate as rupees 43. That's as per net asset method. Now the same thing we'll have to find using yield method. So yield method. Now in order to find yield method, first we need to find the average profit. Now this was as per asset method, so we took asset minus liability. Now it is yield method. So yield ke liye very first thing what you require is average profit. Now average profit ke liye they have given you in the question 3 years ka profits are given. So one is for 2012, 2013, 2014. So we'll write here profit is given. First they are giving you for 2012, 2013 and 2014. The amounts are, first one is 5,44,000, second one is 7,32,000, and third one is 7,88,000. The total comes to 20,64,000. So number one, I need average profit. So average profit will be whatever profit you got divided by 3. So 20,64,000 divided by 3. So we get 6,88,000. From here, less tax. This is like profit before tax. So less tax. Tax is 50%. So into 50% will be 3,44,000. When I subtract it, I get 3,44,000. So this is like profit after tax. From that, less any transfers. So there is a transfer of 20% to GR, 68,800. I minus it and I will get the amount as 2,75,200. So this is like the amount available to equity shareholder. Number one. Secondly, I need you to find expected rate of return. So ERR, expected rate of return, is amount available upon equity capital into 100. So amount available was 2,75,200. Equity capital given in the question is 10 lakhs into 100, which comes to 27.52%. 27.52%. Lastly, we need to find value of share as per yield. So value of share is equal to ERR upon NRR, normal rate of return. ERR was 27.52. Wait. Into paid up value. That's the formula, my bad. ERR was 27.52. NRR given the question is 20. Into paid up value, each value of the share is 20. So we divide, multiply, so we get the value as 27.52 rupees. So this was as per net asset method. This is as per yield method. So I hope you all have understood this particular sum.